So good afternoon, everyone. My name is Jerome Franks. I am the president of CFA Society The Bahamas, and on behalf of the board and myself, I welcome all of you here today as we discuss the topic, Navigating the Bahamas, New Economic Reality and the Road to Economic Recovery. Before we get started, for those of you that may not be familiar with the CFA Society, we are an organization of financial and investment professionals. While not required, the majority of us have the CFA charter or are pursuing the CFA charter. What do? We advocate for the CFA program and designation. We advocate for best practices in the investment community. We do outreach to the public by providing educational seminars and speaker events such as the one today. And we provide networking and career opportunities as well as educational opportunities to our members. So that is who we are and that is what we do. So once again, before we get started, I'll just go over our structure for today. I'll introduce our speakers, then I'll give a few words for context and hand it over to our first speaker, Mr. Beckles. He'll speak for about 10 minutes, followed by our second speaker, Mr. Ferguson, who will also speak for 10 minutes. Then we'll have about 20 to 25 minutes of questions and answers with you, the audience, then we'll wrap up. Please use the chat feature in Zoom to direct your questions to CFA Society The Bahamas, the host for the event. They'll then provide the questions to me and I'll give it to our speakers. So let's get to it. Our first speaker for today is Mr. Jeffrey Beckles. Jeff is the CEO of the Bahamas Chamber of Commerce and Employees Confederation. He's a 23-year veteran of the tourism, hospitality sector and has held several senior management positions with major hotel, casino and golf operations in the Bahamas and throughout the region. He is also an associate pastor at Christ Community Church, an avid cyclist and golfer. Our second speaker is Mr. Anthony Ferguson. Anthony is president of Kalina Financial Advisors Limited, or CFAL. He has over 35 years experience in the financial services industry with particular focus on corporate advisory, international portfolio management, and trading. Anthony is a registered investment advisor, a CFA charter holder, and also holds several other professional designations. He currently serves on several international and local corporate boards and is a past director of several quasi-government agencies. He's also a licensed pilot and boat captain. Once again, thank you both for being here today. I'm sure we are all interested in hearing your thoughts and views on today's topic. While today's discussion is not specifically about the government's budget or public policy, I will reference some key points noted in the budget communication just to get our conversation started and to give some context. The fiscal deficit for the year ended June 2019, I think was about 213 million. The government maintained the aim to further close this gap in 2020 and possibly balance the budget in the coming year. Right? So, however, Hurricane Dorian, as we all know, struck in late August, devastating Abaco and Grand Bahama, resulting in significant financial and property loss. Currently, we are now faced with the fallout of COVID-19, which has brought the tourism industry to a standstill, increased unemployment to over 30%, and further exacerbated existing economic issues. To make matters worse, this hurricane season had an early start and is projected to be very active as well. As a result of all these significant events, the fiscal year is expected to have a fiscal deficit of about $1.3 billion, combined with this post-COVID environment that we now face. So with all of that being said, my question to you gentlemen is this: how do we navigate the Bahamas' new economic reality? And what is the road to economic recovery? So I'll hand it over to you, Mr. Jeffrey Beckles.
Well, good afternoon, and thank you very much. Good to be with you all. And you actually said a mouthful, and I'm very pleased to be with you today. But, you know, our reality is very simple. I think the brief story scenario that you articulated just now can be summed up in one phrase. It's a call to action, right? What are we going to do? How are we going to address this whole economic discussion? And I believe all of us would agree that the environment that that we're born in is certainly not the environment we're living in the Bahamas. As a matter of fact, from January 1st, 2020 to now, the world has changed for us. But the continuing question that is being asked, how are we going to navigate? I know that we've not seen this particular scenario before because the Bahamas right now is faced with a triple threat. We've had years of an economy that wasn't growing, and then we had minimal growth, and then it adjusted a little bit, and then we had the Dorian factor, and now the COVID. So the Bahamas faces what we would call a triple threat, in that we have a major health crisis, we have a social crisis, and of course, we have an economic crisis. And then when you add to that the post-Dorian component, along with now the political environment, it creates for us a challenge on many, many levels. But at the end of the day, as we navigate, there are some things that can't change. And one of those is that we must begin to move very quickly and work more synergistically with the private sector. We've always contended that the private sector is the key, should be the key to driving the economy. But now is a time for us to really take a hard look at how do we make that happen? How do we engage the private sector, who really, when some will even say that the private sector has a 70-25 investment versus government or the public sector. But how do we truly engage the private sector to take its proper lead in this space? And then when we consider the fact that the pandemic now has served as an equalizer. What do I mean by that? Every country around the world is faced with the same challenge, and every country's economy has been impacted. But now, since that is an established fact, just like they are trying to figure out how we're going to do this, many of them are pushing toward their private sector and getting their private sectors up and running. But we have to ask ourselves that same question too. Also, if you look at the global landscape, right? The world is divided into three categories, just like there are in our socioeconomic stratas. We have the poor, we have the middle class, and we have the wealthy. We are not considered a poor country in the Bahamas. We are certainly not considered a wealthy country, but we are certainly considered among the middle class, where we have the expertise in the Bahamas, we have the right ideas. The question, though, is how do we take those ideas and we turn them into collaborations that can move the country forward? I think this is a time when entities like the CFA must also be challenged to ask themselves the question, what role do we see ourselves playing in this? You're an organization who gives a lot of focus to investment and financial advice. But how do you now take your vast experience and join the conversation about the way forward? If in fact we are a middle class country that has ideas, that has the requisite experience, and I believe that in the Bahamas we do have greater experience than we actually behave. We don't do well at engaging that experience. But an organization such as yours will serve a great role in making that change happen. So the only thing that we lack right now is the financial resource. So where do we have to look for that? We can look external and begin to continue to borrow, but that's not the path that we want to take, because continued borrowing always renders us somewhat a slave to the borrower, right? So the lender, right? And so we don't want to continue that. So what do we do? What do we do and how do we do that? I believe that the path forward has to be more focused on asking ourselves the question, what is it that we have? What resources do we have? What natural resources do we have? We've got, for a long time, we talked about aragonite, we've talked about salt, we've talked about our agricultural capacity, we've talked about our airspace, we've talked about our ocean resources. Well, the truth of the matter is we can no longer talk about those things. Why? It is now time for us to begin to drill down and figure out where what these resources are, how can they serve this country, and then on the second level, how can we now serve regional and global needs? And you take salt, for instance. Salt, you know, many people may say what they want about salt, but every country in the world uses salt. But are we yielding it? And so the conversation has to be more toward examining what these resources are and how do we turn them into assets that work for the country. While at the same time, you mentioned the growing deficit. Yes, the deficit continues to grow. Our debt continues to grow. We are required then to look at a strategy that involves a sound, practical debt management program that is going to move us away from these rising GDP numbers and so forth, and start to really focus on getting rid of our debt. I find it interesting that we tell consumers to manage your debt, stay above the line, but then as a country, we seem to give less of a conversation toward that. So while there are two tracks that we could run on, one is finding out what are these resources, how do we make these resources work for the country, while at the same time addressing the issues with our national debt. How do we meet regional needs? How do we meet global needs and demands? This pandemic is obviously demonstrating that the world has haves and have-nots. Can we continue to depend on wealthy countries to give us or to lend us? And the short answer to that is no. Can we expect that they will continue to export food to the Bahamas just because they like us? The answer is no. So what should we be doing? We should be examining what our food security needs are in the agricultural space, and how can we not only feed ourselves, but how could we begin to expand and maximize our agricultural space, whether it's in farming or livestock, to the point where we can now not only feed ourselves and lessen our dependency on foreign exports, but how do we now begin to export into the region and into the world? So there has to be a careful balance. So since the Bahamas literally lies in the middle, we're not a poor country, we're not a wealthy country, but we are a middle-class country that has capacity, that has experience, that has knowledge. We have some of the best creative minds in the country. How do we now take those resources and put them to use? You mentioned one of your core focuses is being investments. Well, how about us collaborating on a new strategy for our investment to reorganize and reconstruct our investment strategy, both domestically and internationally? And then, because if we're going to talk about needing foreign investment and foreign dollars and easing the pressure on our foreign reserves, we must find a collaborative way to figure out our current strategy. What is it that doesn't work in there? What do we need to change it to? How do we tweak it? How do we develop a new strategy that makes it a win-win for the country and for those potential investors? We must also be equally as committed to talking about how do we spur domestic investment? How do we move from just creating a simple job to creating equity and ownership so that Bahamians can actually participate in some of the potential direct foreign investment opportunities that will come up. These are great opportunities for the CFA to get involved and work with organizations like the Chamber and the private sector to figure out how do we do this in a different way, but a better way that is more beneficial to the country. Because on the current track, we can't continue to borrow, we can't continue to expect countries to lend or to give to us or to export to us just because they like us. I find it was interesting. I was reading an article recently where the wealthy countries, the G20 countries, were having the discussion about if they would lend or export to countries that needed help during this COVID pandemic. And it was interesting. What's interesting about their discussion was they were determining what the rules are, and if they do lend or give, how much and when will they give? And that said to me, hey, wait a minute. Are we going to stand around and let a group of people decide on, one, if they will lend us in this time of crisis, and if they do, how much they will give us? That's really not the scenario we want. So I believe that the way forward for us is to espouse greater collaboration. We have to push harder. We have to work harder in getting those issues not just to the table, but represented properly and agitate for change. We have to be more bold in our thinking. We have to think well outside the box. We have to think in the longer term beyond a 12-month budget cycle, because I find it interesting, even with our budget presentation, we're making references to a 36-month impact economically. Well, that would suggest to me then that any budget or any economic thinking has to be within that framework as well. So we have to get beyond looking at a budget to serve us in a 12-month capacity, because then the obvious question is, what next? So I think we have to put our minds together. We need to be, even now, even though the budget presentation has been made, let's take that budget, let's drill down into that budget, let's look at what has been proposed, let's begin to work and determine what is the right strategy, what are the right measurements that we need to put in place to determine sooner rather than later if these budget pronouncements are going to be able to work, and are they working, and what adjustments need to be changed to keep this thing moving in the right direction. It is very difficult for us to keep speaking in terms of the COVID-19 pandemic is evolving and it's changing, and then we use a very static approach. We have to be very dynamic in our thinking. The truth is, there's no gold standard for addressing the economic fallout from COVID-19, which means then that we have to act like a middle-class country, where we look at our resources, where we put those resources to work, and we can't settle for doing things the way we've always done it. The political environment is what it is, but we already agree that our political strategies of the last 30, 40 years have not been as progressive nor successful as we would like them to think. So it even means then that we must make up our minds that we can't rest on the same tracks and run on the same tracks that we did for the last 30, 40 years. So the way forward has to include greater collaboration, a greater embracing of the minds, the extraordinary capacities that we have here in the Bahamas. Some might say it's not rocket science, right? But the truth of the matter is, if we don't get the scientists to the table, we won't have that conversation. So greater collaboration, and then an assessment of what our resources are that we do have, and how do we make them work for the country. It is high time now for us to get to that point, because the way forward, we need to understand very succinctly that countries of the world, as we are now seeing them evolve right in front of us, won't have time to wait for the Bahamas to get it together. We are well capacitated, we're well experienced, we are global in our thinking, we are global in our experience. We need to put this experience to work for the country, and the CFA, as far as I can tell you, has an extraordinary role to play in helping to frame the new narrative and the way forward as we try to get through this economic downturn.
Thank you very much for that. I will reserve questions and comments for afterwards. Mr. Ferguson, are you there? We'll go to you next.
Okay. Well, good evening, everyone. Pleasure to be a part of this webcast today. Yogi Berra said, making predictions is hard, especially about the future. So what I will do is I will summarize where I believe we are at, and then I will make some observations as opposed to making predictions. Just to recap our economic state, it's estimated that our unemployment is around 35 to 40%. The government burn rate is about 150 to 175 million a month. The government debt projected out to 2022, it's probably going to come in around 11.5 billion. GDP should contract. I see the government in their budget is suggesting about 5% contraction. I believe it will be significantly more than that. And based on the numbers that I've calculated, it's going to be around 10 to 15%. What are some of my concerns? Right now, salaries, subsidies, and of course, interest on debt comes up to close to 95%, projecting out 2 years, which leaves very little headwind for government to make any substantive change to the economic model that we currently have. Talking about the future, the problem, as I see it, is that successive governments since 73 has had a broad economic consensus with a particular focus on tourism, which I believe has and continues to serve us well. I believe, however, this has limited the ability of politicians and their advisors to see cracks in the system and to imagine alternatives. There are several futures, all dependent on how government and society respond to this coronavirus and the economic aftermath. Now, let's be clear, our economy was or hasn't grown significantly for the last 5 years. I think last year it was on track to grow about 0.5%. If you go back 6, 7 years, it actually was negative. And so in addition to what I would call slow growth, as well as the Dorian, and there where we lost about 15% of our economy, i.e. Abaco and Grand Bahama, we now have this pandemic. And so I believe we are in what I would call a pansession. So a health pandemic that's now causing a recession pandemic. And so hence pansession. I think though we have a wonderful opportunity to relook at how we manage this economy. Jeff has spoken a lot about the partnerships, the private sector involvement. However, that requires what I will call a mature government, a government that is going to be nonpartisan in their tapping the wealth of knowledge that a significant amount of young people in this country has, and that they can help grow the future. Looking at the government budget, you know, they say you can take someone's budget and you can predict or see where their focus is. I must give them significant credit for the digitization. So the budget for digitization has been doubled. I would like to see that spent judiciously, and it would have been nice to include an Office of Budget and Management to oversee some of these spending. The one major concern I have, however, is the government's decision to borrow a significant portion of the 1.3 billion in foreign currency. Today, we have about 2+ billion foreign debt. As you all know, about a month ago, those foreign debt had yields of the 2024 was yielding around 17.5%, and that was, of course, followed the downgrade. The 2038 yielded about nearly 12%. I think the yield on the 2038 is around 9.5%. I haven't seen it today. The point is this, continued foreign borrowing is extremely expensive. Yes, they are intending on using the foreign agencies to borrow this money, but you know, the fact of the matter is, their calculation is an average cost of capital of about 1.8% on the additional 1.3 billion. Now we know that the IMF, through the special drawing rights, afforded us a 250 million facility at 1.5%. Of course, I'm not sure what the World Bank or the IDB will do. the point I'm making though is when you continue to borrow in foreign currency, it really begin to impair very slowly your one-for-one dollar parity. And I hear everyone is talking about, oh, we have sufficient reserves, et cetera, et cetera. If that is the case, then why are you borrowing 90% of your new debt in foreign currency? Bearing in mind that in 2024, we will have a maturity of 300 million that we will have to refinance. So I'm a little concerned in that respect. But I think, from an economic perspective, there are a couple of futures as I see it. We could descend into unselfishness. We can develop a robust state capitalism. We could develop a radical state socialism, if you will, or we could have a communal society. I am not certain which one we will lean towards because there's no direction from government in this respect. I think over the next 18 months, if you look at the government's budget, they're suggesting basically a full recovery. I think this is not going to happen. I guess like Wall Street, they are believing in this V-shaped recovery. I humbly believe that will be more like an L or a U shape. The fact of the matter is, until there's a vaccine or a real protocol, even if tourists got back to levels that we saw in 2019, when you think about it, it would be only still 50% because of social distancing, et cetera. And so to have a robust revenue stream as is projected seems to me really aggressive. So how do we, navigate this? Well, again, I think we need to be imaginative and be aspirational at the same time. Jeff spoke about resources, aragonite, salt, etc. I would like to add that I think it's time for government to divest themselves of this 370 million in subsidies that they provide to the government quasi-corporations, form joint public-private partnerships. It's time for them to let the private sector play a more dominant role with government providing more regulatory oversight. The single biggest drag on our economy today from a growth perspective is the Bahamas Power and Light. We all know that if we can get our charge down to about 13 cents, even down to 16 cents, we will see a sustainable GDP impact of about 1.25% to 1.5%. Why we haven't focused on this is beyond me, but again, that's politics. It's not economics. And so I think the citizens will have to really call upon government to cause government to not allow this crisis to go to waste and to invoke, if you will, the citizenship mandate of moving this country forward. Having said that, I was going to wrap up so we can get conclusions and questions. What can we do? Well, of course, we could cut costs, and rightfully so. I think because of the high unemployment, government has to continue to provide assistance to its citizens. But I believe we need to really optimize the resources that we have and optimize it from an allocation standpoint. We need to increase transparency in how we spend these monies and to ensure that we are really getting value for money. We need to improve the productivity of this country. I've always said that the productivity is very, very low, and hence, when we have the debt deficit, the demographics is changing in a negative way, and we have low productivity, it does not allow our economy to grow and grow robustly. And so we like to say that, we have one of the highest GDP per capita in this country, but when you really look through the numbers, the average salary in this country is still about $12,000 to $15,000. It is not our GDP per capita average. And so it's causing us to be seen as a successful jurisdiction, a prosperous jurisdiction on the one hand, but on the flip side, it's the international organization when it comes to aid, look at us as being prosperous and are not minded to lend us the kind of money or assistance that we probably should have. And of course, I think finally the government needs to rationalize the civil servants. And I think we have too many consultants, we have too many part-time workers who are also drawing pension. We have some serious challenges in that regard. And the big, particularly for us in the financial sector, the one thing we must do within the next 24 months is rationalize our tax structure. Our tax structure has caused the financial sector a decline of probably 75% since 2000. And we've been talking about this, but no one wants to pull the trigger on reforming our tax structure, making it more progressive as opposed to regressive, which it is now. And also, we are one of the high-cost jurisdictions in the world. But from a financial sector perspective, we are penalized by the OECD because, quote unquote, we don't have tax when our effective tax rate in this country borders between 35 and 40%. With that, I will leave it for Mr. Franks to open up for questions, and I will hopefully clarify any questions you may have.
Sounds good. Thank you both. Just a reminder to the audience, feel free to send your questions to CFA Society The Bahamas, and I'll pose it to our speakers. So first question from the audience. So the government noted in their budget, and this is for both of you guys, the government noted in their budget that it would be cutting subventions. If the government is to reduce subventions, and I guess the likely result would be staff as well, what do you see as being the economic impact, and how difficult is it for the private sector to absorb a lot of those workers?
One of the things that we must be careful with is trying to identify that list of subventions, right? The government in its budget has, several entities that they provide subventions for. But specifically, I'll go to the state-owned entities and I'll deal with those. We've all agreed that they have been a burden to us for a while because they operate at most times at a loss. Those are the ones that I believe that can be panned off to private sector management groups, where we lessen the unemployment of individuals who are currently there. As far as some of the other programs, I think one of the things that we can actually advocate for is to let's just see what is that list of subvention programs that you have, and let's figure that out. But as far as the how does the private sector absorb those, that's going to be a bit of a challenge, particularly if the projections remain as they are for companies to be cutting back and unemployment reaching the levels they are. But this speaks too about the need because for us to assess our own skill sets, because I can tell you if an A player gets laid off, an A player will probably get hired before a B or a C or a D player. So this goes back to one of the things that we need to do is invest in re-education of our workforce.
I mean, well, the subvention, I didn't see the decrease, that the question is referring to. The subvention, the subsidy this year is going to be about $370,855,000, I believe. Yes, on the weekly wages, there's a significant cut, which one would assume would be some sort of rationalization and cutting of staff. I think, it's really just putting more burden on national insurance. National insurance had a deficit last year. When I say deficit, meaning the total contribution, total investment income versus what they paid out of about 35 plus million. And so I know in July is expected they will increase the insurable wage, which will increase some degree of contribution. However, national insurance is running a significant deficit. So when the government, is taking monies, cutting on the right hand and they put them back on the social service, perhaps it's time that they really include national insurance as part of the total budget so we can really get a better feel for where we're at. I mean, the reality is there are about $2+ billion of unfunded pension liabilities in this country. And so we have serious challenges. But again, the misnomer that when you privatize or you allow competition in certain areas that there will be a decline in employment is not so. When the government opened up the airwaves in the 90s, I guess, when Prime Minister Hubert Ingraham at the time did that, we only had to contend with ZNS. Today, there are 25 plus radio stations that have generated significant employment. And so the whole industry has expanded. So again, I think we need to stop being myopic. And I think the big thing is the reason why governments continue to hold on to these companies is because we all know what it is. Let's call a spade a spade. It is an employment agency for the members of parliament to provide jobs to their constituents to be re-elected. It has nothing to do with running an efficient government that the taxpayers could be proud of and not mind paying taxes because they get good service for value. So I would leave it at that.
All right, thank you both. Another question. Jeffrey spoke a lot about resources and using our resources. A question came in: how realistic is it for the Bahamas to become less reliant on imports and more self-sufficient in the short to medium term? And I guess, what's the most efficient way for this to happen in that period?
Well, the chances of that happening are good. One of the things that we really have to do is we've spoken a lot, we've given a lot of lip service to a lot of these very critical areas, right? But now is the time for us to really bear down and begin to flesh out strategies. I'll give an example. The issue of food security, right, is a big conversation right now, regionally and globally. Well, this year's budget allocation was what, 9 million for agriculture, right? Reasonably speaking, I would have anticipated a $100 million allocation if we're going to really be seriously talking about food security. But then I said, okay, even if the government doesn't put the money in it, is the government prepared to pave the way for private sector investment in the agricultural space so that we can move more expeditiously to resolving the food security issue? So it can happen. We have been minded to keep repeating what we've been repeating for the last 40 years, right? About salt, about our ocean resources, about explorations of other resources like oil and other things in the Bahamas. So it can happen. I believe that we have to push for the change in the narrative on it. And something that Tony said earlier, we have to push in a way that these efforts are no longer politicized for the short-term gain, but for the longer sustainability and economic viability of the country. But it can be done.
Well, I mean, if I may, as Jeff rightfully pointed out, and as I indicated earlier, you can always tell from a budget how serious governments really are, right? And they're not serious, right? And it's very, very clear. Poultry import is about $80 million a year. Fresh fruits, etc., is a couple $100 million. Yet the increase in the budget for agriculture and fisheries was a little over $500,000. You just can't be serious. So until we are prepared to get serious, I think we will continue to find ourselves putting our heads in the sand and finding that the economy is going to grow slower with the increasing deficit. So you know, the last time I checked in Israel, they were in the desert and they have some of the best agricultural products globally. If you put the right resources in poultry and egg farming, for instance, within 12 months to 18 months, you can be, I wouldn't use the word self-sufficient, but certainly well on your way to creating an alternative industry that creates employment opportunities. If you talk about imposing on these heads of agreement that we seemingly love to execute and provide these red carpets to the foreigners and not to the Bahamians, and mandate that they have to purchase X amount of goods, fruits and vegetables and agricultural products as part of their purchase globally, we could reduce our import and of course preserve some of our foreign reserves. So the fact of the matter is, you know, they like to talk about what they're doing, but you know, at the end of the day, full of crap. I mean, it's just not the plans, not the execution gives one comfort that we know what we're doing and we know where we're going and we know what we want to achieve in 5 to 10 years.
All right. I have another question. Tony, you would have touched on tax reform earlier. So the question is, can you expand more on, I guess, your views as far as implementing a progressive tax structure and what combination of that progressive tax and I guess our existing tax do you think is most appropriate to propel the country forward? Right
now, the country gets 37% of its revenue from VAT, 37%. Our import, the duties that we pay is still a significant amount. But back to the financial sector, if I focus there for a second, we have lost 75% of our financial sector, which were on average, let's say twice the average salary of the tourism sector and the economy by and large. So, you know, at one point, financial sector was close to 25% direct, indirect of GDP. If it's 10% now, that's a lot. I would submit that it's probably lower. And so we continue to operate a high tax jurisdiction, but we don't want to call a spade a spade. So for instance, we have in certain sectors where, in the insurance sector in particular, we pay 3% premium tax. So we pay on the revenues, just like, you know, business license, etc. What it does is it causes business to not be able to manage their cash flow. It discourages entrepreneurship because if someone is getting started, they have to pay the duty up front and then try to sell that afterwards. So in my opinion, I think we need to convert business tax, business license into a corporate tax. And at some point, you know, we can delay it, but if I don't pay income tax in my life, I can almost assure you that my daughter or her kids one day will have to pay income tax because we will not have the working class resource, if you will, to support a taxation system. And so we're gonna have to adjust that. So for instance, the average age in this country is still under 40, but the impact on NIB, as we all can see, is significant where they're now paying out more than they're actually earning, plus the contribution that's being made. So the fact of the matter is, we have that $2 billion unfunded pension liability out there. So all of these things has to be funded. It can't be funded by duties. So the only place it will be funded is by either income tax, corporate tax, or a combination thereof. And so at least with the income tax, you could always say anyone under 12,000 or 15,000, which is where the average salaries in this country is in any event, don't have to pay taxes. So you could make it a little bit more progressive. Right now, we pay 12.5% VAT. I submit to you that within 2 years after the next election, whomever is elected, they will probably have to increase the VAT to 15%. That's inevitable, if not higher. And so we will find ourselves in a place where we have to be reactive as opposed to proactive in planning out how we wish to manage our economy. And so I would strongly direct the government convert with immediate effect the business license into a corporate tax, make it on net, and then adjust from there. But at some point it has to come.
Well, I think the other thing, Tony, I would add very quickly to your scenario, if we are going to be so dependent on import duties, and the current conversation is calling for a contraction of imports in the coming months because of the economic fallout, the question has to be asked then, what's the plan for making up that shortfall? Because if your imports are going to be down significantly, and we're so heavy reliant on customs duties, the person who asked the question, simply do the math. We just won't be able to, we'll get tighter and tighter in that wedge. That wedge is going to just close in slowly but surely on us in the coming months.
Okay, thank you. Another question. BPL's debt as the rate reduction bond finalization was delayed due to the pandemic. Was this a wise decision given the volatility of the world markets? Do you believe the process will follow through successfully later in the year? So it's a question on BPL's debt rate reduction bond.
Well, I mean,
anyone?
If I may take the first stab, I guess what they were trying to do in the first instance, just a little background, was something similar to what was done at the NASA Airport Development Company, where you have their passenger facility, passenger security charge to service the debt. The challenge with BPL is, right, with the greatest respect, it's not that they wanted to delay it. It's not that COVID-19 caused the delay. There was no appetite for the debt of BPL for any number of reasons. First and foremost, government is still controlling it. So it's poorly managed, has been poorly managed, will continue to be poorly managed. And until you can give investors confidence that the management has the capacity to manage in an efficient manner with reduction in the cost of generating electricity, the appetite for BPL debt will continue to be extremely low, save for national insurance and government controlled entities. The fact of the matter is, as I said earlier, the Bahamas government 2024's a month ago traded as high as 17.5%. Now think about it, that's 3 years. 3 years. That's not even junk. That means the IMF is gonna come in here and restructure your finance. So that's exactly what happened to Barbados several years ago. And it ended up trading and where they had to renegotiate about 25% off. So the fact is, there was no appetite for BPL though. That's why they didn't do it. And until BPL is prepared to make some tough decisions, or no, the government is prepared to make some tough decisions in terms of the management, getting out of the management of it and making it more efficient. What government should really do is privatize generation and keep regulatory or the transmission. That way they can control the cost of distribution to the end consumer. But I do not see BPL being able to raise, even with a rate reduction bond, anything under 9.5%. And one of the other reasons why they were not able to do it was because the lenders wanted it to be variable, right? And not a fixed rate, because initially when it was conceived, it was gonna be 2 or 3 cents per kilowatt. So, but when you look at the expanding inefficiencies and the growing debt, that was not gonna be sufficient to cover the debt. And hence they wanted to make it variable so they could adjust it as the debt increased. And of course, I don't think government was prepared to make that tough decision. And so as such, they did not, or was not able to refinance their debt.
Well said.
All right, just another question, and I'll start with you, Jeff. I think Tony mentioned earlier well, this would be for both of you, but I'll start with you, Jeff. Tony mentioned earlier the additional borrowing of foreign currency as a part of the fiscal deficit. The question is, with the looming downgrade and potential blacklisting, kind of restricting, I guess, our financial activity with certain jurisdictions, all adding to the cost of borrowing and, you know, the resulting cost of repayment, how realistic is it that our currency can be devalued in the short to medium term?
Let me just say this. I think we're finally beginning to pay attention to our historical pattern of borrow without a sound debt management plan, right? Yes, the cost of money will get higher, and it has gotten higher. The risk to the dollar is also higher. But also keep in mind that on the current trend, yeah, the possibility of that occurring is always growing. But we're also in a very dynamic global market as well. But the risk is there, and the pressure is, in fact, the pressure is already being applied to us in many other spaces in the financial world. So the potential for it happening is greater today than it was before. The likelihood of it happening still a bit up in the air, as far as I can tell.
I mean, the only thing I would say in that respect is we are fortunate at this particular time because of the lack of tourism, meaning imports, that their drain on the reserves will be minimal. And also because of the decline in oil prices over the last year, you know, our import price by BPL has also been down. So, you know, let's hope that, you know, oil prices continue to trend down and not up. So it will provide us some headroom there for less impact on the reserves. And of course, you know, while tourism is not, probably wouldn't be back for another 24 months, it will limit the drawdown on the reserves. However, the increase in borrowing, it's only a matter of time, my friends. You could only stretch a rubber band so far before it snaps. And the fact of the matter is, unless we are re-engineering our economy where we are producing more than tourism to show up imports of US dollars via locals, I think we will continue to find ourselves challenged at some point, maybe not in my lifetime, but unless there is plan to grow this economy between 7.5% and 10% over the next 7 years, we're going to have some challenges.
Thank you. We have time for perhaps one or two more questions. Another question that came in: the $2 billion unfunded pension liability was mentioned. What are the views on closing off the defined benefit plan to new participants and pivoting to a defined contribution, for instance, an employee contributory pension plan for the government? Is this not considered a low-hanging fruit?
Well, it is depending. Certainly, it is for me, and I am constantly baffled as our hesitation in addressing it. I'll say this: I can't find a model in the world that has been using the same system where it has proven successful or profitable, and I don't know what causes us to believe that we will be the first country to maintain it and be successful. So I believe that the time has passed, but certainly the urgency with which we must move to change it to a contributory one is the time is now to do that.
Again, you know, that's our business. We have recommended repeatedly to any number of quasi-government agencies to convert from a DB to a DC plan. In fairness, some has converted to a DC plan, but again, the lack of political will to make the tough decisions to cause all of these plans to be contributory will only further burden, not us, but our kids tomorrow and in the future. And so I'm hoping that out of this PAN session, that government will now cause mandatory savings as in Bermuda, as in the Cayman, and on some of the developed world. And so I'm hopeful that that will be one of the changes that we see coming out of this PAN session.
Okay, and our last question for today: with the constant threat of blacklisting by the international regulatory bodies, what do you anticipate our financial services sector will look like in the near to medium term?
Well, Tony, we've had this conversation several times. I think we have really got to put a lot more energy into not just responding in a reactive way to those markets. I think we have to do much more to advocate for government to make some changes, but also to make ourselves a lot more attractive in the short term, so that that conversation and dialogue changes to a more positive one. On this current trend, it's going to be difficult. It's going to be challenging. Tony?
Well, I gave a presentation at the University of Bahamas, I don't know, maybe 5 years ago. And I said at the time that financial services will continue to decline and the banks will continue to leave. And the one area that I believe that will continue to do well, I wasn't being self-serving, but I was quite serious about it, was the investment side of the business. Regrettably, from where I sit, I fully expect at least another 5 to 7 Swiss banks that are operational here within the next 24 months to not be here. I think though, there's a serious opportunity in the fintech/investment side of the business. And so, in concluding from the CFAL, the CFA Society, I believe that most people in this business are in good stead, and those who are aspirant financial advisors. So, and in particular, if the government were to make mandatory savings. And so, from the financial sector, I think we will see consolidation or contraction in terms of services from the commercial banks. Certainly in the offshore banks, it's definitely going to probably end up being about maybe 10 maximum, if that much. I would say more like, say, 6 or 7. And I think we're going to be challenged going forward. But the investment management business, the fintech side of the business, and maybe the fund administration side will continue to grow from where I stand.
Just a quick follow-up on what you just said. I guess what current conditions that you, analyze or I guess you think present the greatest challenge that would cause those businesses to disappear over the next 24 months, as you noted?
Well, the fact of the matter is, right, regrettable. It's unfortunate, but at the time, I'm sure there was good intention. And as they say, the road to hell is paved with good intentions. In the 80s, 90s, 2000, we used to send people on the road talking about we were a tax haven. I've never used the word tax haven in my marketing trips. I always said we were a tax efficient, neutral jurisdiction. And you can take that however you wish. But the fact of the matter is a lot of money came here, not for return on capital, but for preservation of capital and out of the reach of your government and privacy. Given that we now have a level playing field, those objectives no longer exist. And as such, because of all of the pressure, a lot of monies have returned to their home jurisdiction. They have returned to low-cost jurisdiction on a relative basis. And as such, most banks here have lost significant assets over the last 5 years. And I would again say 75% of them are not making money. And all you need to do is look in the Tribune or Guardian between March and now. Because of COVID-19, a lot of financials were delayed. And you can look at the financials on the banking sector, and you can see earnings are down significantly. you can see earnings are negative. And then when you compound that with an increased compliance and the risks of getting fined, head office is saying, you know, it's not worth being in this jurisdiction. And again, this is the reason why we will continue without question. As night follow day, we will continue to see a contraction in the banking sector.
All right. Thank you once again, as well as you, Jeff. Thank you once again. You guys have any, would like to say any closing remarks as we wrap up?
Well, thank you again, but I'd just like to leave you with this very interesting thought. There are a lot of questions being posed about the way forward, right? But I just want to call our attention. There are some significant things that have already been pointed out to us over the years that we have not done, right? Energy reform is one of those. No economy can flourish without energy reform, particularly here in the Bahamas, right? We have to have clean, affordable, sustainable energy, consistent energy. Secondly, many of the structural and administrative weaknesses that have been pointed out to us over the decades, we've still never done anything with those, right? COVID-19 is not going to cause them to go away. We must advocate, continue to advocate for changes in those areas. And then the ease of doing business, those challenges that we've always had are not going to go away either. So we need not forget that we already have some existing issues that have been pointed out to us and we've already agreed. And so I just want to urge the CFA, don't get caught in trying to figure out the new thing. We got to go and do the things that we've already been told that are hurting us as a country and focus on those. And yes, COVID-19 and the other issues post-Dorian will cause us to make some additional adjustments. But by and large, if we don't fix the things that we already know that ails us, here we are. Thank you again.
Well, I think I totally agree with Jeff. And again, thank you for affording me the opportunity. Look forward to more of these discussions about the economy, and hopefully the decision makers will listen to some and perhaps implement some of these things for the better of the country.
Well, thank you, gentlemen, both. On behalf of my board and myself, we greatly appreciate you joining us here this afternoon. Great thanks to our audience, your participation, your questions. You know, I think we learned a lot definitely from you guys, and you know, it's like you said, it's about the next steps forward, making our case to decision makers, policy makers, and continue to advocate for better changes in the Bahamas. So this is the first seminar or web seminar for the CFA Society of the Bahamas, but we will continue to do more events like this, whether it be virtual or eventually back in physical condition. But for now, it'll likely be virtual. So be on the lookout for future events. And once again, thank you, gentlemen, so much. Really appreciate it. And to everybody, enjoy your day, and thank you for joining us.
Thank you.
Take good care and thanks. Be safe. Enjoy the weekend.
Thank you. You too.
Thank you. Bye.